Hi, Warriors. Let the market come to you. Shahab, how are you? Bran, especially on sleepy, non-volatile days. Alexander, how are you? Bruno, welcome to F.A.C.E. We always start at the top of the hour for future reference. AJ, Michael, James, Ryan. Hi, Laura and Marcus Toman. Nice to meet you. David Fox, nice to meet you. So let's take a look at what's happening here. Why don't I start off with Ryan? Good morning, buddy.
Morning, mate. How you doing?
Okay, so correction begun in US dollar yen?
Begun. Might be a bit early. We need to see what
Okay,
those wizards at the BOJ decide to pull out the hat for us tomorrow morning.
okay, because there are two drives. So I
Yeah,
would probably take a shot at one more high.
you
We
might.
diverged at the second one. I think we would diverge if we got another one out of the BOJ.
Yeah, you might get one if they're not as hawkish as the market would want them to be.
Okay. Um, I was looking at Euro Pound, it didn't really turn last week. And maybe there's one more low. Maybe they turn it here. What do you think? Pound still, pound up, euro down. We had one
Yeah,
day
well,
last week when that wasn't happening.
I had a level at 85.50, an old level, and it bounced from there, but it couldn't even get up to the big figure.
Yeah.
So it's continuing the downtrend it's seen for since January, and this move coming back so quickly to the 50 level will spell a bit of trouble, and then we might finally be on a move for the 85 handle, and that'll be
Okay.
the real big test.
Yeah, I was looking at that on the weekly. So we needed to do something right on a weekly basis,
Yeah,
so maybe clean out the stops here and then reverse. Um, but here, is this the 85 level you're talking about?
yeah, right in there.
Yeah,
84.90 is a bit of
yeah,
the sort of final line in the sand. So if you get a break of 85, but it can't clear 90, then that would likely be the
yeah.
dip high. But if it goes through there, then we could have some legs, maybe down to 84, 83 even.
Okay. Um, Canada kind of put in a funky week. I mean, here's Canada, a nice, pin on it, nice
Yeah,
tail compared to Dixie last week. So, Canada led the way down and it bottomed first is maybe Canada saying we're going to correct in the dollar and we get some type of pullback in USD CAD, maybe back down into this range before we make
yeah,
another run.
yeah. I mean, it was a pretty strong failure up there, wasn't it?
Yeah,
When we had that run up. So
yeah.
yeah, try the top now, try the bottom, and we try and trade both edges.
Okay. Um, no one should really be surprised at the weakness in silver. We've been all over it here at what's the name of our company again? ForexAnalytix. Yeah,
Forex
so here it
masterminds.
is. So here it is, a breakout finally really expressing itself in the gold silver ratio. So, I
Yeah.
mean, I was saying this could spell more trouble for silver. And, we're only about a buck away from where a lot of people were saying it should complete. Um, Gold hanging tough comparatively, but, I'm not ready to buy the gold yet either. So um, that's my take. Why don't I bring K-Man in and see
Not
how
today.
he's. Oh,
It's his birthday
okay.
today, so he's taking a well-earned day off.
Oh, well, he should have come in. Would have sang happy birthday to him, but maybe next year.
Yeah,
So,
I told him to clear off. He shouldn't have been here at all on his birthday, seeing it's a big. I only have to whisper it because he doesn't want to
oh,
advertise it.
it's a
It's a
decade.
milestone. Yeah, it's a
Yeah.
milestone.
God, I didn't know he was turning 80 today. Wow. I tell you, he's very young and has very good vitality for 80. So, You tell him. You laugh. That's not that far away
I'm
from
not going
me.
to tell him. You can tell him.
All right, all right, all right. So, anything else you're focused on here, Ryan? Yields looks like they paused a little bit here. They got up to what was almost 420?
Yeah, nearly up to that level everyone's been looking at, isn't it? 420.
Yeah.
Yeah, you just had China there. Their stock markets took another caning
Did it?
early
Yeah.
days. So yeah, they're still under the cosh. They kept their rates unchanged. One of their lending rates, the LPR, that was kept unchanged, like the prior one, the MLF. So
What
they're
are
not.
they? What are they waiting for?
Well, that's the question we asked on the flow show this morning. You know, I'm getting the feeling that the market is thinking, right, well, we're not getting any big bazookas from China, so let's start
Right.
pushing some buttons, because they're not coming at it hammer and tong. You know, they've got the stock market collapsing in China. That's not good for the population invested in stocks. So that's not a good look domestically, which is obviously very
Right.
important when you
Right.
control the population. And they've got this deleveraging from everyone else globally. So trade isn't looking too hot either. So they're fighting battles on both fronts. And at some point, they've got to step in and go, enough's enough. You know, let's stop pussyfooting around, getting the banks to support currencies and whatnot. So I think we're edging closer to when we start getting some big guns coming out from officials over there and drawing a line, because they can't let this continue indefinitely.
Okay. So the FXI actually pre-opening, so that we'll see. That's going to open at new lows, 2088.
Yeah.
Not by a lot, but still. Here's Bob. Same type of look.
And
Yeah.
and
So
Kay made the good point. You know, if investors are getting out of China, getting out of Chinese stocks, where are they going to go to put that money? You know, is
They're
that
already here.
part of the reason
They're
why the
here.
Nikkei is going up, the US is going up, and everyone else is going up?
yeah, they could put it in Evergrande, right?
Yeah.
Oh, and you know what? I've almost forgot, Ryan, that nice trade Friday on the S&Ps. I know you took a little heat, but I bet you were still there for that rally.
Yeah, I got a bit lucky. I got a bit, I've been talking about this potentially breaking for the last week or so.
Yeah.
Felt like it was going to go. Yeah, I got in 48.10. It looked a bit iffy. I moved my stop down from 47.85 to 47.80, 5 ticks, and that saved me by 2.5 pips.
Wow.
And then it shot up. So yeah, bit of
Not
luck,
against,
bit of judgment.
yeah, not against luck.
No, I would have been completely pissed if I'd have got stopped and then it rallied into the close.
Yeah. Right the market, wrong the trade.
Yeah.
Everyone raise their hand if that's ever happened to you. If you don't
My
raise
hands
your
up.
hand, you're a liar. Only three? Oh, four. Everyone in here. All right.
Yeah.
Anyway, it's one of the aggravating, but it's like three putting. Right? Right, Blake?
Oh, don't even talk to me about three putting. I three putted a lot actually on Saturday. It was
All right.
one of those rounds.
You had the yips, man.
Yeah, definitely get the yips. That's funny. Hey, good morning, guys.
Good morning,
Happy
Blake.
Monday to you.
Yeah,
Morning.
very
Yeah,
happy.
and you were just talking about China, and you said something, Ryan, that stuck out to me. You're like, well, they can't let this go on indefinitely. What's China going to do? What are they going to do?
They've got to bring out the big guns, haven't they?
Well,
They've got
yeah.
to
I mean, I guess that's
go heavy on
the
rates.
case. Sorry, Dale, I just took over because
That's
I
cool.
want to show you just really quick. I mean, you got it's like you indefinitely. I mean, I want to take a step back really quick, and I want everybody to understand what I think anyway that Xi is doing here as far as monetary policy and trying to legitimize the Chinese economy. Maybe that's the way I should state it. They have been taking steps over the last several years to gain legitimacy as far as economic data goes, so people believe what, they're releasing, stop doing monetary policy to just build ghost cities, and infrastructure that's internal, because everybody, the whole world is like, yeah, you're not doing anything for your own economy when you do that, so I think because China has done this, you've seen this bleeding out of, Chinese equities, but also one thing that we have to realize in this world, it is not, we are not cornered into just equities anymore. There's the bond market now, and the largest bond market in the world, which is U.S. Treasuries, actually yields something. So when I look at the Chinese markets and go, yeah, well, it's bleeding lower, but we're not going to. This isn't uncharted territory. It's not like we can, if Chinese markets go back to levels that we saw in the mid 2000 teens, who cares? I mean, in light of
They care.
everything that's happening, you know what I mean? I don't see it as a big deal, and I don't think Chinese markets are going very far. I mean, we might, yeah. I mean, and I'm just using the Chinese 50 as a benchmark here, like the Dow Jones Industrial Average. Yeah, we could trade below 10,000, maybe 9,500. It's not like, like I said, it's not in uncharted territory. Wouldn't you guys agree with that? It's like we have alternatives in this world now. We are not pigeonholed into stocks. And if money is going from one place to another, yeah, it's coming out of China, it's going into Nikkei, it's going into DAX, it's going into US markets, it's coming back home. I say back home because money has fleeted the United States for years, for decades. And it's all coming back, and you can see it, plain as day as we have the S&P in the all-time high territory. So,
But it's
anyway.
not a closed shop everywhere else. In China, it's a closed shop. I mean, you've got people who have been encouraged to buy property off plan, and in the midst of all that, the property market's blown up. So they've had to rush around authorities to support that. Meanwhile, everyone else is investing in Chinese stocks because they keep getting told the Chinese economy is doing all right. So everyone domestically invests in stocks. They're collapsing. So now you've had people who lost money on property, people lose money on stocks. They can't allow that in China because it's such a closed shop. That's when you get rebellions kicking off and whatnot. And that's not the way they work.
Well, who cares? We're going to have a rebellion here in the United States. It's going to be civil war all over the world this year.
Yeah, but there were more guns in that one.
Do you really believe that?
And then you guys are going to have a civil war too. And you guys are going to have to, since you guys don't have guns, you're going to have to shoot each other with BB guns. Because you're going to have another election in the UK.
Yeah, they're fortunate.
I'm just kidding. Jokes aside, I get what you're saying, Ryan. I do understand what you're saying, especially with, well, I mean, I would, if I was doing anything in China, I would be trying to stabilize the real estate market, because that's where so many people that the wealthy have their money stored in China. Which is
what they've been doing for the last 2 years, and now they're facing another, negative side of the stock market. We don't care, but they do. They care a lot. And that's why I think, several things can happen that perhaps these moves now, if they pick up steam, and I think there's the possibility that we have a flush out. Oh, sorry.
Yeah.
Small cup. I think it leads to the possibility there might be a bit of a blowout if the market gets too negative and they don't step in. We could see a little bit of a crash, and then that will force their hand. But it also could mean that China starts being a bit more friendly in its comments to the West, to the US. Because it's losing money. With everyone moving away from them, and so they're getting hit on all sides. They need to change something.
So Luke Roman said that he thought Xi came to San Francisco for the reasons that you guys are talking about, and something we could do to help would be to generate a weaker dollar. So, Brian, I think they've spent a lot of money defending the yuan over the last year or so. So that may be part of it. That would help. a weak dollar would help the whole world. So, that's something to keep an eye on for this year. I mean, I'm still waiting for, 105-ish to sell, but
But what
Oh, you
that
mean
would,
in the dollar index? Yeah.
yeah, yeah,
what reason has the US got to help China out? The US is doing all right.
that's a good point.
Doing all right.
Well, they own half of our debt or more than. You know
They're
what I
getting
mean?
paid more on it because of high
Yeah,
rates.
they do. They do. They could obviously send some ripples through our fixed income markets. Yeah, so but you're right, Ryan, you make a great point. Hey, but let's move along to a different subject because the market might be kind of quiet today. Everybody's out because it's K-Man's birthday. Happy birthday, K-Man, if you're listening in for some reason. Anyway, happy birthday to K-Man. I didn't know it was his birthday until you said something. But jokes aside, though, today might be a little quiet ahead of the BOJ, and we have the BOJ tonight. The dollar Japanese yen, is in this ascending channel. We look like we're stalling here because we need some evidence that we should be buying or selling yen a little bit more. But take a look at the Nikkei. If you guys haven't seen the Nikkei, I was talking about it on the week ahead video. I said, hey, we're gonna rally to the 161% extension, but when we do that, relative strength is going to be very divergent. Now we reach technical levels, and they just happen. Dale, Ryan. I mean, we've been around, decades, and you see technical levels, and you go, "Wow, isn't it weird how we just stopped at this major technical level, and then X happens?" Like tonight, we have the BOJ. Now, no one, and Ryan, I'd love to hear you chime in here. No one expects anything out of the BOJ today. Like zero. Like it's their status quo. Nothing gonna happen. They're not gonna make any comments. But what do you think?
Well, as K-Man said, his risk for something happening is about 5%, and I tend to agree. But
So you're saying there's a chance?
There's always a chance. There always is a chance in this game, but it's funny because the 5% risk, as you describe it now, seems like a huge risk because if they want to pull a surprise and the next meeting after this one isn't until right when we get those spring wage deals popping up, it could be the last moment for them to give some communication ahead of that. So it could be a big 5% risk, big little risk.
I have a feeling, and knowing K-Man, and knowing you, I have a feeling you guys might be getting up pretty early tomorrow morning to be around for this BOJ meeting. What do you think? Are you setting your alarm tonight, Brian?
Not as yet.
Okay.
I might do. I might get up a bit early just to see what's fishing. So yeah, we'll see what it brings. It could be a nothing burger or it could be a something burger.
Yeah. Well, fortunately, I will be around, and you guys, make sure you guys are around in the ForexAnalytix chat room tonight because I'll be there for the BOJ, and as will a lot of traders. Will be.
What time? What time? Your time?
It's usually around noon Tokyo, so give or take, let's see, that is 8 o'clock, I believe, my time. If I'm not noon Tokyo time to Arizona time, let me see, it's 8 o'clock my time, so that would be 10 o'clock Eastern, roughly, and you have to, maybe a little bit before, maybe a little bit after. And there's always speculation if they go a little bit, if it comes in a little bit after noon Tokyo time, then people start going, oh shoot, are they going to say something crazy? And remember, they do have a press conference today, so that's
and the forecast. The important thing about the BOJ is it's an updated forecast meeting, so that's going to be potentially big news for whether they're staying on the path or delaying the path to possible tightening.
Yeah. Hey, real quick. Here, let me pull up the FTSE. FTSE, FTSE. Let me see if I can pull up the FTSE. I'll just pull up this. George asks, "Hey, why is the FTSE 100 lagging its European and American peers, Ryan, by a large
Yeah,
margin?"
I'll just type in a reply, but I'll say it otherwise. It's a weird beast, the FTSE. You can't look at it in general terms like you can other markets. It's very internationalized. It's got a lot of companies that do a lot of business abroad, so it's reflective of what's happening in other countries as well as what happens with the pound. Because obviously, if you're making profits in dollars, then the level of the FX rate can affect your profitability. So therefore, that becomes a component of it. The fundamentals in the UK probably have as the least amount of input into the FTSE as other things. So yeah, it is a bit laggard, but that's more probably to do, as I say, what's happening with other markets more than what's happening in the UK. But it's a bit of a head scratcher even for someone who lives here trying to trade this one. It doesn't move like everyone else does. So yeah, strange one.
Well, thanks for chiming in on that. Real quick, before I move away from the BOJ, I just want to take a real quick look for everybody that's here. I want to take a look at some of these yen pairs really quick because, you got the euro yen, and let's just kind of discuss these a little bit. And the euro yen's trying to carve out a lower high. I mean, that's the bottom line. We're ahead of the 78% retracement here. We held the 38% retracement on dips. You can see how important the 200 DMA is. So that's pretty apparent. And I would be thinking, as far as the euro yen goes, and the euro's been really underperforming. You look at the euro dollar, we can't get back above 109.10, which is the key resistance. Highlighted it in the week ahead video that I did over the weekend, obviously. And to the overnight high was 109.10, what I said on Saturday. So it's still holding, which is keeping the euro in check. Notice the guppy or the pound yen, recent highs obviously are holding right now. Aussie yen is this is a multi-year trend line, guys, just so you guys can see. I mean, multi-decade, May 2007 to like today. We're struggling at that big trend line. And I think Aussie's dollars trade like absolute garbage. Just FYI, it trades like garbage. And if stocks come under pressure at some point, and we'll talk about the stock market here, if it comes under pressure at some point, the Aussie is just going to get smashed. It's underperforming and it looks like shit. And the Australian economy is starting to roll over as you had the RBA super hawkish going into the end of 2023. Kiwi really kind of struggling as well, and the Canadian yen right up against highs. You can just take this and put it here and put it here, and you could argue that we're up against a pretty key trend line here in the Canadian yen. So with that being said, you can see all these yen pairs right up against resistance ahead of the BOJ. The Nikkei is at the 161% extension. If Ryan's 5% chance of the BOJ rocking the boat tonight happens, it's going to happen with some of these, really key, FX pairs too, and the Nikkei, rejecting some big resistance levels. So just wanted to point all that out. Real quick, I want to go into stocks. I want to talk about the S&P at all-time highs. But Dale, you did mention silver. So yeah. Silver did break down. You're right. We've been talking about this. If you look at the blog from my edge chart of the day from last week, it's the last entry here was here on the 17th. We are at risk of a longer term breakdown. The 2250 level did give way because we had a false breakout. We are expecting an eventual breakdown, but the first test will be this 2115.
I was thinking about that, Blake, when I was looking at my charts and yours. The high was 26. It tried to hold, what was that, 22 and a half a couple times before today.
Yeah.
Okay. So that's $3.50. 3.5 from 22 and a half is $19 silver.
Yeah. I mean, that would be, to
and no
me,
one's talking about it, but Blake Morrow. And
I'm not. I would say that a breakdown is possible. Where we go from there is just, for me, it'll just be
Well,
just
that's a measurement. If you believe this is an important area, and if you zoom in on it, it looks like it is. I mean, you did zoom in on it. So
yeah, well, yeah, and I guess you could argue that that 127% extension of this entire
look at
move
that.
will just take us
Okay.
right around there. Yeah, I mean,
Yeah.
it seems possible.
Yeah. Yeah.
I just
No one
think
will be. Everyone will be a bear down there.
of course they will be, and then that's probably the time that you want to be a buyer.
Anyway,
So,
yeah.
but and that's the issue I have with precious metals, and just precious metals in general. I do not know a bear in gold
Right.
and silver at the beginning of this year. At
Yeah.
the end of last year, there was no precious metals bears, zero. And so I think that we are due for a pullback unless something happens. Obviously you don't want to be short. I've talked a lot about that. You don't want to be short these, but are you going to be able to find a better price to be long gold and silver? I think so. And I think it'll give you some nice, great opportunities to go add some coins to your collection. Anyway, let's talk real quick about the S&P because obviously we closed at all-time highs Friday. We had VIXpiration. Market didn't reverse as a lot of people were expecting. After the VIXpiration, we were going to see a sell-off in stocks. We closed at highs, very illiquid. I had people texting me at the end of the day on Friday. I'm like, dude, it's Friday afternoon. You're like, I can tell they're standing in the way. They're just like, this is crazy, and stocks kept going higher. And I'm like, it's Friday and no one's here except for you standing in front of the market. And you're texting me complaining about it. Look, that was an illiquid run up and close at highs. Why not? And let's screw everybody until you get every bear turning, which there are still some vocal bears out there that are very, they're reluctant bears, they're vocal bears. And until you squeeze them all out and you get everybody going, all right, fine, we're in breakout territory, the market's going to squeeze. And, here we are, 161% extension. We're coming into play. As I said in the week ahead video, that seems like a very logical place for us to go. The problem that technically the market has is we're going to be very divergent with relative strengths. So chasing the S&P up here is going to be very dangerous, in my opinion, especially ahead of huge earnings this week. We have Netflix tomorrow, if I'm not mistaken. We have let me just give you a few of the names. Actually, let's do this because I think Gavin did a great job of bringing this up on Friday. Let's go over to the news and research room. Let's go back to not today. Let's go. Okay, here. Whoops. No, that's going to be a better one here. So we have Netflix on Tuesday, 3M, GE, that's big, IBM, Tesla, Intel, and notice I said Intel, IBM, there's Texas Instruments somewhere. You got all these semiconductor companies that are going to be reporting. And if you guys have not seen it, and Jim Welsh brought this up on Friday, Dale, which I wasn't looking at until Jim brought it up. Look at the semiconductor index.
Yeah.
I mean, it is ripping. Parabolic. So when it's parabolic like that into earnings, if you have any disappointment this week, you're going to have a little bit of a problem here, as we rally into highs. So I'll be watching those this week. So
I think we've just had the signal, Blake. If you go back to the newsroom.
Yep, going back to the newsroom. Here we go.
All the way down.
All the way to City. Oh,
that's the top.
Oh,
Yeah.
City's good. They are good. City Tech, they are good. And speaking of which, that's great, Ryan. Thanks for bringing that up.
Yeah, sell the crap. I might get out my longs on that call.
Shorted. All right, short everything. No, I also want to point out really quick something else this morning, guys, before Andy gets here, and he might even be here this morning. If you look at the dollar CAD, you were talking about it when we first started this morning. I didn't want to interrupt you, Dale. But as I said on the week ahead video over the weekend, 134 is a big level for me. I put in a bid this morning unfortunately, right below the lows. I was trying to get long at the 38% retracement. But if you listen to the week ahead video, you knew that I was going to do that even as I was telling everybody in the ForexAnalytix chat room when I got up this morning, I'm like, hey, well, here we are. So unfortunately, it just missed my bid by literally 2 pips, and I'm a little irritated because we've already rallied 20 pips off the lows, and I'm not sure if I'm going to get that level anymore. But that's going to be a key pivot this week ahead of the Bank of Canada on Wednesday. So remember, the BOC is on Wednesday, and I've been trying to buy this stupid dollar Canadian, and it missed me by just a couple of pips, but that's all right. Well, this 134 level is going to be pretty key. All right, I know we have a great
Limit
interview.
orders, limit success. If you really like a trade, you buy it.
Oh, Dale, now you tell me.
You know that.
No, I do a lot of target trading on days like
Yeah.
today, meaning that I put my orders in and I know where I want to be involved. Sometimes I get triggered, sometimes I don't. It's when you have a day like today where there's not a lot of economic data that's going to drive the market.
Yeah.
I tend to be a little bit more careful about chasing things, giving it,
Okay.
2 or 3 pips to, just get me in. I do a lot of more surgical target trading on days like today.
I was just giving you a hard time.
I know, that's all right. Well,
That's all right.
hey,
The bus will
it's
come around again.
it's
Andy
really
is
nice
here.
it's really nice to have Andy here, and to hear his analysis on the markets and probably what he has to say about the bond market. I want to thank Ryan for being here today. K-Man, if you happen to be listening in from your car,
Birthday
or from your
boy.
desk, happy birthday, Dale. When he comes back tomorrow, you better sing him a happy birthday song.
The guitar's in my office, buddy.
Crap. Well, pick it up for tomorrow. All right. All right, Dale. So
All right.
thank you for guiding us every day. Traders, I'll see you at the ForexAnalytix community. I'll see you on the morning edge in about 45 minutes. For everybody else, we'll see you tomorrow morning. Same bat time, same bat channel. Thanks, Ryan.
Cheers, guys.
Thanks, mate.
Cheers,
See,
mate.
I'm international.
You are.
Thank you, mate.
You are so worldly.
All right, and thank you, Captain. All right, and thank you, Andy Constant, for joining us today. How are you, Andy? Happy New Year to you. Waiting for
Hey,
you
Dale,
to.
just trying to get my video and stuff going.
Okay, cool.
All right. Oh, it's
Hey,
brighter.
Happy New
Happy
Year,
New
buddy.
Year to you.
You know, I want to congratulate you for getting your stuff out on CNBC lately, and nice little breakthrough for you. And it's been really top shelf stuff that you've said on there. You were there for the turning point. I just want to give our viewers the backstory before we look ahead. One day I sent Andy a video. I was still bearish euro looking for 102. He said, I disagree. And that was the low in the euro, never got to 102. Euro started advancing. And then one day I'm cruising through my house and I look at CNBC and Andy's there. I'm not sure what the event was, Andy, if it was the mixture of treasuries. That may have been the day. And then there was another day, it may have been a CPI number. But basically, your message was buy all assets, quote unquote. Okay.
Yeah.
And that was an excellent call. Bonds had a huge rally, dollar headed lower, S&Ps rally. And they asked you about S&Ps. And you said, well, 44, maybe 4,500. Did new all-time highs surprise you, or did it evolve into being able to see that coming?
Yeah. So let me just briefly mention that. So last summer on July 31st, I was also on CNBC and gave a heads up on what the quarterly refunding announcement was going to look like and what it meant for assets. And my view at that time was sell bonds, sell stocks. That played out beautifully with both of them going down 10 to 15%. And then on Halloween, Janet Yellen reversed some of the pressure on the bond market, and that caused the low. And that's when you saw the buy all assets. Unfortunately, it's gone too far, much farther than I expected. And actually, by the end of the month, I was short assets again. And now I'm getting squeezed a little bit on the stocks, though the bonds have more than come back from the peak. And so what's interesting is on next Wednesday, you have another quarterly refunding announcement and an FOMC meeting. And, you know, with assets up here, both bonds and stocks, bonds are still not cheap. You know, you could have a reversal depending on what plays out.
Okay, so TLT, I saw it down here too. I was looking for 92 to 94, so I mean it blew
Yeah.
away my expectations. And we've had a little bit of a pullback, but halfway back would be about 90, 61, around 89. So are you expecting this to be just a correction of this advance, or is it going to take out the lows? And is your expectation that after a pullback, we could have another wave like this later on? Another,
Yeah, so I think we could be choppy. I would say one thing, which seems to be what you've said as well. Markets have gone from one extreme to another fairly rapidly over the last 2 years.
yeah,
And to me, the moves have been from a point of extreme irrationality to the opposite side of irrationality,
yeah,
in which you know, get these incredible moves. And I think we're in the midst of another one. And I don't have a low estimate for treasury bonds. If we continue to see this economy do what, you know, it is ironic that Citi is now calling for an economy.
yeah.
I saw that
Oh,
on your,
yeah.
yeah, of course that's ironic, but
It's like
when
Barron's.
when it comes to the economy, I've been higher for longer than anybody, and still stick around with my view. It hasn't really changed at all, that the economy, both the real economy and likely the stickiness of inflation, will last a long time. And so, you know, that favors stocks over bonds, but it certainly is negative. At a minimum, it's negative for bonds. And I think the bigger step back one has to do when thinking about the bond market is recognize that the Treasury has significantly increased the proportion of bills they have outstanding
Right.
as a portion of the debt, and that won't last. And so what will happen over time is, well, number one, unfortunately, there seems no political will from either party, and certainly when there's gridlock, neither party. Um, Both parties,
To
to
cut
reduce the
spending.
deficit.
Yeah,
And so, and whether it's, you know, a Republican view that you should cut taxes or a Democrat view that you should increase spending, both of them are deficit increasers. And
right.
even in the event of a unified House, Senate, and presidency in 2025, whichever way that plays, deficits aren't coming down; they're staying high. So a combination of significant amount of front run bills issuance and large continued deficits means that the duration of the private sector's treasury ownership is going to extend. And markets aren't priced for that sort of extension on TLT here. So, you know, you can't be and so when I think about that, I think what's normal. And currently, one measure of the value of a long-term treasury is in the term premium, and it's currently negative 15, negative 20 basis points. And in non-QE periods, forget QT, in non-QE periods, term premiums are, you know, 125 basis points. And, you know, that's 145 basis points from here. And to me, that's just
Fair
the
value.
it's just fair. That's fair. And maybe we stay above fair for a long time. But if you take 100 and let's say 100 basis points and add it on to treasury yields, you know, TLT is below the lows. It's trading with a 5.5% yield instead of a 4.5% yield. And so
Okay.
I don't think you can buy long-term treasuries because there's so much coming and so little the private sector seems to want treasuries. You got an inverted yield curve, well, or flattish yield curve, assuming what's priced in terms of Fed cuts, which I think is also extreme. But you've got a, particularly given the economy is so strong, but you got a flattish yield curve. That doesn't create a lot of incentive to buy long-term bonds. They're rich from a term premium standpoint. And so, you know, a year from now, I would expect the term premium to have expanded by 100 basis points. And that alone puts a 20% price headwind to TLT. Now, do I think it's going to go down 20%? It depends. If the economy keeps pace with what it's been doing, yes, I do think it'll be down 20%. If we have a recession, maybe down only 5 or 10% because, you know, growth and inflation will continue to fall. But then stocks are going to get crushed. They're going to go down 20 to 30%. So, you know, that's my long-term outlook. As it relates to what happens, you know, in the next week or two, it'll all depend on the news that I just described in terms of the quarterly refunding. And Janet Yellen has a choice. She can either increase, she has really only one choice. She can either it's not 3 options. She really has only 2 options. She can keep coupons about the same, or she can significantly increase the coupons that she's issuing. And you have to say, well, if she significantly increases the near-term coupons, it's probably going to be a negative for bonds. And maybe you test that 90 price on TLT, which is my expectation.
Okay.
But if she doesn't load bonds in this next quarterly refunding announcement, the question is, what's the upside? And because you know she's going to have to over the next 2 to 3 years, regardless of who's in the administration. And so it's just tough for me to run against that headwind.
Okay. You know, Luke Roman has mentioned that bonds are trading like Banana Republic because they're risk on, risk off now, and they're not risk. They're not when there's risk on. The market could still rally and the bonds come off, but this is what really fueled it. And you know, you explained to me that there wasn't going to be a flight to quality rally in bonds, I don't know, about 6 months ago. And for the market to have trouble, you needed a bear market in bonds. Are we still in that stage? Are we getting closer to where if the economy weakens, the bonds could do okay and hold?
Well, you know, as I said, I think that, you know, when I talked to you about that, that was you know, in July. And,
right.
you know, we had the things that would have played out for a script for a recession for stocks down to, you know, 82 on TLT.
Yeah.
And then Janet decided to delay the recession.
Okay.
And now she bought herself another 3 months. And you can see that in the incredible rally in both stocks and bonds. That's why I went buy all assets. The question is going forward, can she keep delaying the inevitability of a recession, which will start with higher bond yields, long-term bond yields, and then result in lower multiples, and then result in lower demand by the wealth effect, and then cause stock earnings to fall, and finally cause, you know, job losses. You know, unemployment rate still is extremely strong. GDP is still, you know, well above target, and inflation's come down a lot, which is great. But the Fed has sort of, as of December, unleashed animal spirits regarding, you know, future cuts in the of the Fed funds rate using this real interest rate Taylor rule based idea, and financial conditions have exploded easier. And so, you know, we've started to see some pushback from the Fed, but the data, you know, they can push back all they want until you start seeing the inflation data firm. That doesn't have to go pop back up. No one's expecting that without a supply chain disruption. But until you start to see it firm, people are just going to take the Fed and ignore them until they're forced to act. And that really comes in March. And in March, you know, they're not going to do anything in January. We know that. They're going to talk about QT. Maybe it gets slowed or paused or whatever. And, you know, that's an important issue. But mostly the Fed is all talk in January. And the market is pricing a 50% chance of a cut in March. And we'll get a new SEP plot in March. So I think the Fed is mostly off the page for the next 3 months until, and if data warms on the inflation front, you're going to get a real bad reaction in 2 years, in 2-year notes.
Okay. So in March, I believe that emergency facility that they put in for when the regional banks failed, that could end then too, unless, it was for an emergency. It doesn't look like there's an emergency anymore. Would
Yeah, the
that have any
BTFP
impact?
program.
Yes.
The BTFP program, it ends on March 11th. And
Okay.
ending is an interesting word. Usually when people think of ending, they think the Fed is going to force the banks to pay them back. But based on the terms, and you just have to look at A.5 and D.6 in the document, turns out anybody in the program as of March 10th of this year can extend another year. So that whole thing is, to me, completely moot.
Okay.
That there is no March 11th BTFP event whatsoever. And the only thing that'll happen, and also, if you noticed last week, they mentioned the mandatory requirement to use/test your use of the discount window. The discount window existed and could have solved the problem that the BTFP addressed back in a year ago in March. But there was a stigma associated with participating at the discount window. And so they thought they'd create a new program, which was also had modestly better terms to ease the problem. I think they're just going to a regime in which the discount window is their emergency thing and trying to eliminate the stigma. And so I think that's the development on emergency programs going forward. But we'll see.
Thanks for clarifying that. I know you keep an eye on the dollar, Andy. You have any view? Has it changed? Is it possible that Xi, when he came to San Francisco, was talking about the state of his economy and having to intervene to support the yuan, and was maybe asking for some relief on a strong dollar with like a weaker one, and the rest of the world would benefit from a weaker dollar, wouldn't it?
Yeah, I mean, the way I think of currencies is obviously it's relative conditions, and the relative conditions in the United States have been led by the Fed more than any of that stuff. And the relative conditions have weakened, and the dollar has, at least begun to, and this is sort of since Janet in October, and then through till the peak in where is that? Jan.
It was only a couple weeks
December.
ago. Yeah.
You got all that coming from the Fed, saying we're done. And all that rally, all that rally in the dollar, where are we?
Euro? This is the euro.
Yeah, okay, right. So all that sell-off in the dollar, strength in the euro, is because the euro has been stayed steady regarding its policy expectations, and the U.S. has gone full dove. And so that weakened the dollar. And it makes sense to me that it weakened the dollar. And now you're starting to see the walk back, the talk. We had 175 basis points of cuts priced in December in 2024, at that peak. And now we only have, 130, 135. That's a big move, and it's important in the dollar. Do you mind if I share the screen briefly? Do you think I can?
Oh, no. Sure, go ahead.
Let me see if I have this chart.
So I'm thinking you're looking for the dollar to continue to strengthen a little bit with bond yields going back down?
Yeah, really no.
TLT going down? Yeah.
So really, look at this chart. This is my favorite provider of currency flow information, the folks at State Street. And what they do is they look at every single position. They're one of the biggest global custodians of assets on Earth. Top 2, I think. Maybe number 1. And this is their clients. And right now, if you look at this chart, what it says is, are the holdings in each currency overweight or underweight? And that's the y-axis. And on the x-axis, you have whether they're buying on the right or selling on the left. And so what you see in the dollar is pretty darn rare, which is equal weight neutral buying and selling. And I think that's about right for the dollar. Now, there's some anomalies out there, like the euro to me looks oversold and underweight. And so I'd be real cautious based on this alone, being short the euro here. And, other currencies you can see, but nothing besides the euro and maybe the Aussie are in a vulnerable territory to me. So anyway, I like this. And what it says to me is what the macro is telling me, which is that the US dollar is going to be volatile regarding the relative easing and tightening. And if the Fed does in fact go as fast as the market is priced in terms of cuts, the dollar's likely to get weaker. And longer term, the issuance and the deficit and all of the things that we just talked about at the beginning are bearish dollar. But, right now, nothing looks to me to be actionable because of both the technical levels to the extent that watch that, and the positioning relatively balanced, and the pushback that's happening on the short end. So
I think the
pushback
may give us a buying opportunity in euro around 107 is kind of a technical area I'm eyeballing.
I think euros, I think my next trade will be long euro. I'm just not sure where.
Okay. Andy, how about metals? I know you trade gold. So, your call for being long all assets to me right now feels like you've shifted to the other side as they correct from the huge rallies they had. So are you negative gold right now or neutral? Because silver's been getting hammered.
Right now I'm short a little bit of gold in my alpha portfolio. Just as a reminder, I also always have a beta portfolio that's long gold. So I guess short term I'm bearish gold, but not very much.
Okay.
All in all, I'd say it's okay, but it's one of many assets. And I think that based on the quarterly refunding on next Wednesday, assets, including gold, either go up or down based on what the decision is.
Do you have any comment? Do you follow the miners at all?
I don't. I do have a colleague that does.
Jimmy?
I just set up a partnership with Shy Girl.
Tracy,
on Twitter,
yeah.
and she and I now have a collaborative effort called DS Shy Girl that's dealing with commodities, and Jimmy Jude as well, that deals with commodities and we obviously focus on metals and producers, miners, etc.
Because they're testing 2 or 3 year lows.
Right. The only thing that we've looked at that we sort of like right now, we got long oil, not at the lows, but in here. And we just recently recommended a small junior uranium miner of all things. But, that's really Tracy's job. I don't know. I just keep her in the macro framework I use to deal with those things.
All right. Well, another great addition to your team. I've talked to Tracy many times over the years. And Andy, I want to thank you for, coming in here every quarter or so and edifying us and giving us really crystallizing what's happening with bonds and how it affects all the other asset classes. And just appreciate your contribution to edifying our community. I want to thank you.
I appreciate being here. It's a great opportunity.
And the best place to follow you is on X is just at
Damp Spring.
Yeah.
And dampspring.com if you're interested in working with me in other ways.
Okay, cool. All right. Andy Constant, everybody. Follow Andy at Damp Spring. And if your ideas are fuzzy, read Andy's work. It's going to be an asset to you. It'll crystallize things, and he does it in a way that even I can understand.
Dale, thanks.
All right, buddy. Andy Constance, everybody. Enjoy the rest of your day, folks. You could join the group in 20 minutes, a team. And don't just count your pips, count your blessings. I'll see you guys tomorrow. Adios. You're welcome, everyone.